This is Market Lens for Wednesday, June 24, 2026. Today's map is split. Japan equities and real estate still hold the cleanest uptrend setups. Metals are deeply oversold but unstable, and U.S. equities are showing more fragile leadership beneath the surface. The biggest warning signs are in China equities and crypto, where downtrends remain firmly in place. Let's walk through where conditions look supportive, where they are balanced, and where risk is still elevated. Across today's Market Lens table, the strongest opportunity scores belong to Japan equities and real estate, both at +2, supported by uptrends and normal volatility. Metals sit in the middle, with sideways trend behavior but very stretched downside moves. Emerging markets and Hong Kong are range-bound, while U.S. equities are mixed with elevated volatility. At the bottom of the ranking, China equities and crypto carry the most caution, with persistent downtrends and weaker risk profiles. Japan equities remain one of the stronger setups in today's Market Lens. The trend is up, volatility is normal, and the opportunity score is +2, pointing to a broadly favorable regime with balanced risk. EWJ is still above both its 50-day and 200-day averages, and the recent weakness looks more like a pullback inside an uptrend than a full breakdown. The supportive side includes a weaker yen helping exporters and continued policy focus on technology and semiconductor investment. The main risks are Bank of Japan tightening expectations, currency intervention risk, and possible spillover from global technology weakness. Bottom line, Japan remains constructive, but not immune to policy and currency shocks. Real estate also sits near the top of the Market Lens ranking. The asset class is in an uptrend, volatility is normal, and the opportunity score is +2. VNQ remains above both its 50-day and 200-day averages, with stretch near trend, which keeps the setup relatively balanced. The positive case is that volatility is contained. Income-oriented assets may still attract interest, and slightly softer mortgage rate readings can ease some pressure on sentiment. The key headwind is that financing costs remain elevated, and rate expectations still matter heavily for REIT valuations and cap rate assumptions. Bottom line, real estate looks technically constructive, but still very rate-dependent. Metals are more complicated. The trend is sideways, volatility is mixed, and the opportunity score is +1, suggesting a neutral to mildly constructive regime rather than a clean uptrend. Gold and silver are both very oversold after sharp recent weakness, which can create room for stabilization if selling pressure fades. Safe haven demand could return quickly if macro or geopolitical stress rises. But the headwinds are meaningful. The group is well below its 50-day average. The dollar remains a pressure point for dollar-priced metals, and higher real rate expectations can reduce the appeal of non-yielding assets. Bottom line, metals may be rebound sensitive, but the setup is still choppy. Hong Kong equities are in a sideways trend with normal volatility and an opportunity score of +0.5. That keeps the regime range-bound, not broken, but still fragile. EWH is oversold and posted a small one-day gain, which helps the near-term tone, yet it remains below both its 50-day and 200-day averages. The market is still closely tied to China sentiment, global technology risk appetite, and U.S. rate expectations. A stronger dollar and tighter financial conditions can also weigh on Hong Kong assets. Bottom line, Hong Kong is showing some stabilization potential, but the technical backdrop still lacks a strong directional edge. Emerging markets are balanced rather than strongly directional. The trend is sideways, volatility is normal, and the opportunity score is 0. VWO is slightly below its 50-day average, but still above its 200-day average, so the medium-term base has not fully broken. Normal volatility and near-trend stretch are supportive. But the recent 5-day move is negative, and the asset class lacks a clear upside signal. The main pressures are a stronger dollar, China-linked weakness, and uneven country-specific fiscal and reform risks. Bottom line, emerging markets are not flashing broad stress, but they are still waiting for a cleaner catalyst. U.S. equities are mixed, with elevated volatility and an opportunity score of -0.5. The broad market is not breaking down across the board. SPY and QQQ remain in uptrends and above their key moving averages, but leadership has become more fragile, with GOOG and NVDA both sideways, oversold, and below their 50-day averages. AI and large-cap technology remain important structural drivers, but semiconductor weakness, valuation sensitivity, stronger dollar pressure, and higher rate expectations have made the setup less forgiving. Bottom line, the U.S. market still has support, but the leadership profile is more vulnerable than the headline index trend suggests. China equities remain under pressure. The trend is down, volatility is normal, and the opportunity score is -1.7, signaling a cautious regime. MCHI is well below both its 50-day and 200-day averages and is oversold after a nearly 5% 5-day decline. The positive side is that oversold conditions can create room for stabilization, and policy support expectations may help if execution becomes more convincing. But the dominant headwinds are persistent technical weakness, dollar strength, reduced global risk appetite, and ongoing concerns around China growth, property, and technology policy. Bottom line, China remains rebound sensitive, but the downtrend is still the main message. Crypto is the weakest regime in today's market lens. The trend is down, volatility is high, and the opportunity score is -2.5, pointing to elevated downside risk. Both Bitcoin and Ethereum are below their 50-day and 200-day averages, and both are very oversold. That can make rebounds sharp if liquidation pressure fades, especially because Bitcoin and Ethereum remain the most liquid large-cap crypto assets. But the headwinds are clear: high volatility, stronger dollar pressure, rate concerns, and weaker appetite for high beta risk assets. Bottom line, crypto may be relief rally sensitive, but the prevailing setup remains fragile. Go beyond the highlights. Get the full Market Lens report in your inbox. Powerful AI-driven insights on global markets, critical news, risks, and opportunities to help protect and grow your money.